Well, the Dow Jones Industrial Average, like clockwork, spurted to another all-time high, closing in fact, on its 75th since Election Day 1 year ago tomorrow. That's what I call a Trump rally. But for the most part, it was a sloppy, uninspiring session as a couple of earnings duds coupled with more anxiety or angst over this tax bill and, of course, increasing risk around the world, geopolitical, took some of the wind out of this rally's sails. But there's the crude oil rally. Now, much has been made of this stealth move in oil being connected to this power upheaval that you have in Saudi Arabia. Although the story is filled with intrigue, the most important news coming out of the Middle Kingdom, honestly, is its commitment to clean up the global oil glut. That glut, by the way, was triggered by Saudi Arabia back in 2014. It was their effort to derail the U.S. fracking miracle. I got to tell you, at the time, I thought maybe they'd have a Pyrrhic victory, but the results have been much worse. When Saudi Arabia began flooding the world with crude oil, its foreign reserves were at a record $737 billion. Crude trading above $100 a barrel. Well, today, crude is down 46% from their June high. And, well, the Saudi foreign reserves are down to $487 billion, the lowest since early 2011. However, everyone's crying uncle now. This summer, Saudi Arabia, OPEC, and Russia all cried uncle, and they agreed to cap production. This also as U.S. producers began to slow down the increase in oil rigs. Meanwhile, virtually every week is seeing drawdowns in crude inventories, which topped out, in fact, hit an all-time high of 535 million barrels on March 24th. So we've got this combination, right? OPEC caps, rig counts hitting a plateau, increasing demand. That's what you call the old 1-2-3 punch. West Texas Intermediate up 36% since the June low. Conventional wisdom at that time was talking about a 3-handle. There were some experts predicting a 2-handle. Now, this morning, frac sand supplier U.S. Silica beat on revenues, earnings. Also, they offered upbeat guidance for the quarter and next year. They said 2018 is going to be a strong year driven by record demand. So with all of that being said, make sure you have exposure to the oil patch. Oh, snap. Snap just released their earnings results, and I got to tell you, they beat the street by a penny, and that's where the good news stops. The internals were absolutely awful. They grew less than 3%. 178 million users just ain't enough. They're not keeping pace with all the other hot apps out there. The initial reaction, you can see on the board, the stock is getting smoked. Marriott, meantime, unchanged after raising its guidance for the current quarter, but Take-Two taking off after raising its guidance for the full year.